Alright, in this video, I'd like to take a few minutes and talk about Robinhood stock. If you've been watching this stock recently, it has been getting destroyed and it can't seem to find a bottom anywhere. It's like no one wants to buy Robinhood. And what I'd like to do is actually refer to Jeremy Lefebvre. If you're familiar with him, he's the Jeremy from the Financial Education Channel. Recently, in several of his videos, he's talked about Robinhood stock and he's made a specific point a couple different times now. And so what I'd like to do is play a short clip from his most recent video where I heard him talking about this, and I'm going to just play the entire clip. I'm not taking him out of context or anything like that. I want you to hear what he has to say, and then I'm going to react to it and talk about some ideas that I think are crucial, that are very important, that will keep you from making a mistake with Robinhood stock.
Robinhood today is trading at about a $6 billion market cap, and at some point it was actually under $5 billion, or excuse me, actually under $6 billion, so it was in the fives. Okay, Robinhood has cash on their balance sheet, of about $6 billion. So here you're basically buying the whole Robinhood company for essentially almost like free today because of how much cash they have and what their market cap's at. And I just think this illustrates the point of just no one wants to buy anything right now, because it's very rare you ever see a name brand company, which Robinhood's an extremely famous company in the stock market because it's a dang stock brokerage, okay? And it's very rare you ever get to see a company that is as famous as Robinhood is, that's trading at a market cap that is less than the amount of cash the company has on the balance sheet. It would be like, you trying to sell your house and saying, I'm going to sell my house for $1 million, but there's actually $1.2 million of cash buried in the backyard. It's like, oh, wow, okay, cool. So I basically getting the house for free, essentially. And that's essentially what's happening with Robinhood. You're basically getting the whole company for free right now. And that's, remember they used to do the free stock promo or whatever? Now you get a company for free, the whole dang thing, okay? But that's the sort of market we're in right now. That folks don't want to take any risk, and like, that's a money-losing company. We don't want any part of it right now. And we'll see how much longer that market lasts, but that is the market we're in right now.
Okay, so number one, does Jeremy have a point that this is a ridiculous situation? Well, yeah, it sounds like a totally irrational situation where a company could be trading for less than the amount of cash that it has on its balance sheet, right? And when he talks about it's like buying a house with money buried in the backyard or in the basement or something like that, yeah, when you say it's like you're getting the company for free when you buy the stock at this price, it makes it sound like a deal that's just too good to pass up. But number two, what is Jeremy doing? Have you heard him talk about buying Robinhood stock in his videos? He says things like, maybe someday, but there's other great opportunities right now. He said that in a couple of his other videos. In this video, he doesn't really refer to it. He just says that's the kind of crazy market we're in right now. Nobody wants to buy this stock. But I think it's important that we talk about why is no one buying this stock. And I want to tell you why I'm not going to touch it. And I really recommend that you think twice before touching Robinhood stock either. Part of my reason for this channel is to share my experiences, not only the good things and the strategies that I've learned and the positive things, but also the negative experiences. And I'll tell you what, the hardest thing as an investor is to talk about the mistakes that you made. As an investor, it's painful to relive and think about the mistakes that you made where you lost money. But I think as an investing YouTuber, channel creator, I think that's critical for me to share those kind of experiences with you. And when I think about the different creators that I've followed on YouTube or in other places, the investors that will share their mistakes with me have taught me the most, and I can avoid making those same mistakes, or I can at least try to avoid those losses and that pain. And so I'm going to do that with you. And I think in this case, there's one specific stock that I can zero in on that I think illustrates the exact same point. And I think by the end of this video, you're going to understand why I wouldn't touch Robinhood for anything. Okay, the stock for this example of my mistake is Macy's, ticker symbol M. So right now you're probably thinking, Macy's? Seriously? Of all the stocks you could invest in? Man, of course you lost on that, Jeff. Okay, but it's 2018. I'm much earlier in my stock investing journey, and I'm really just zeroed in on fundamental analysis. I've been learning all about reading the financials, crunching the numbers, and figuring out which companies are undervalued. And Macy's is checking all the boxes. 2018, okay? So pretend you don't know what Macy's stock has done for the past 4 years. Back in August of 2018, I'm buying Macy's stock around $36 a share because it is undervalued. During this time, I'm looking for companies that are safe, they have predictable revenue, they have consistently paid dividends for a long history, they have a low dividend payout ratio, they have strong financials to back up their company, they have a low PE. Macy's is checking all these boxes. Of course, what you and I know today is that Macy's is an older brand and it's fading and it's not really competing, it's not adapting or adapting quickly enough against newer up and coming brands and brands that really appeal to millennials and are willing to change and adapt. Macy's just hasn't been that company. Okay, so I learned through this mistake, through this experience, that you can't just bury your head in the financials and you have to pay attention to social trends as well. Okay, but put that lesson aside for a moment. There's one specific thing that I really zeroed in on during the time that I owned Macy's. You see, I started buying it in August of 2018, but I didn't sell out of it completely until January of 2020. And if you look at the stock price over that time, there were some ups and downs. And as a fundamental investor, I kept reanalyzing and looking at the stock and saying, but there's this one thing, there's this one argument. And so I've found an article from back in 2020 that really kind of breaks it down in a very simple way. And I want to take a look at it with you. Okay, so this article is on yahoo.com and it was written on April 16th, 2020. And if we look at the stock price back then, April of 2020, we're talking down at the very bottom that Macy's ever hit. Okay, so this writer goes through, and here's the main point of the article, is if you look at Macy's, they have 839 stores, but there are 342 of those stores that were company owned. They owned the real estate, which is not necessarily normal for retail chains to own the actual real estate. But Macy's owned a lot of these high profile, large square foot retail properties that were very, very valuable. Now, of course, these numbers have probably changed considerably, but the writer back then in 2020 goes through his analysis of why the property value alone for the real estate of the different Macy's properties would be $11.7 billion. Okay, and here's what's important is the market cap when he's writing this article is $2 billion. And he makes the case right down here that if you only look at their flagship property, the main location that's downtown Manhattan, the location where they have the Macy's Day Parade every year, Macy's Thanksgiving Day Parade, okay, right down from the Empire State Building. Just that property alone is estimated back then to be $3 to $4 billion. It's a 2.5 million square foot property, prime real estate. So just that one property is worth more than the entire market cap of Macy's, right? So as a conservative fundamental investor, what's the idea? You should be buying. This is an incredible value. The value of the company has to be worth more, right? The stock price eventually has to come back, right? That's the implication. And that's the implication with Jeremy talking about Robinhood stock is it's a steal. How can we not invest in this company? So here's what I want to say. If you happen to read that article and buy Macy's stock back on April 16th at $6 a share or even less, are you a happy investor? Well, absolutely, because you timed it perfectly with that article. You've gone up about 3.5x. Congratulations. If you bought it back then and you still own it today, way to go. You rock. Okay? I would love to be able to say I did that. But here's the thing. I started buying back in August of 2018, right here. And here's the thing. That argument was going on at $36 a share. That idea that the total value of the real estate properties that Macy's owned was something I remember reading very early in my research. And think about it. If the stock price is $36 up here, the stock price was $6 down here, okay? He said the market cap was $2 billion. This is easy enough math. $2 billion market cap at $6 would be times 6, right? The share price was 6 times higher up here. So we're talking about a market cap of roughly $12 billion back up here when I was buying, and the conservative estimate of the properties was $11.7 billion. So it was easy to see that the value of the company of their real estate assets alone should have been about the price of the total market cap of the company. Does this sound familiar? And so I was doubling down, adding to my position, what? And finally on January 27th, right before that last big drop, I realized I had learned my lesson and I finally got out completely. And the lesson is this is what I want you to hear and really internalize so that you don't make this mistake. The stock market never has to agree with your analysis of what those hard assets should be worth in Macy's stock or Robinhood stock. You see, the market 4 years later, even though the price has 3.5x'd from when that person wrote the article, has the market cap gained the value of the total property that Macy's owned? The property values back then, a conservative estimate being $11.7 billion. Do you think that number has gone up or down since then? I think it's pretty safe to say that the overall basket of real estate property prices has gone up. And the market cap of Macy's today, 4 years later, it's still only $6 billion. The stock market is made up of investors, and investors don't ever have to agree with the total value of the hard assets that a company owns if they don't believe in the company, the leadership, and the story. And I believe that's what the problem is with Macy's stock. And honestly, I believe that's what the problem is with Robinhood stock as well. Why do I say that? Well, the reason I won't touch Robinhood stock has to do with what happened with their story. You see, Robinhood as a brokerage had a great story at the beginning. They were revolutionizing investing. They were bringing commission-free trading to the masses. They were helping the little guy. The little guy was going to carry them to success. But let me ask you, what happened during the GameStop meme stock craziness? Robinhood lost its reputation. Robinhood got a new reputation, and the way that they responded to the whole crisis, well, it left a lot of investors feeling burned, feeling like they had been let down and wanting to not have anything to do with the stock. Now, do I still use the brokerage? Yeah, I do. I don't have a large account over there, but I do like to use it. But will I invest in the stock? No, I won't. You see, I think Robinhood made some major mistakes, and I don't know if retail investors will ever forgive them, because they don't have to. And there's nothing that says that the price ever has to come back to a value that makes sense fundamentally. It may. And you may invest in Robinhood and it may 3x or 3.5x over the next 4 years. If you happen to catch the bottom, good luck to you. I won't be joining. I hope that this video is helpful to you. I hope it can save you some pain. And I hope you have a great day.